All right, everyone. Here we are with ticker symbol GME, Gamestop Corporation. Before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, GameStop, for those of you that aren't aware of the history in the last year, GameStop last year at this same time was going through the whole issue of almost going bankrupt. It was restructuring everything. It was losing a lot of revenue and it was on its way down. And this thing ended up costing like almost $3 and it jumped up to like $6 and then it fell again all the way until March, that it actually was rising up again and it had hit some highs. But let's go ahead and go back in history a little bit so we could see what was going on. So at the beginning of the year, it had reached $6 and it was hanging out in that area. It had done a recovery, and towards March it was falling. It reached $3 again, and then it started rising again before the end of February, all the way up to $5 and some change, and it dipped down to $2.60. This is actually the lowest that I have seen GameStop in a while, in probably years. And from that point forward, the volatility has been a lot of sideways up and down movement, but it reached up to $5 and it's been an exponential growth in the last 2 to 3 months from that point forward all the way to where we're at now, almost hitting $15. I mean, GameStop has done a whole 360, and a lot of technical analysis are saying the same thing, and they're saying a strong buy right now. I mean, the news for GameStop has been phenomenal. It's towards the end of the year. The PS5, the Xbox that's coming out, the new consoles, right? Gaming consoles, new games, Activision, Rockstar Entertainment. All these guys are making new games, the EA Sports games, all that stuff adds up to GameStop's revenue. Every time a new game comes out, they're selling it. And then also how they flip games when people trade in their old games and then they get another amount of revenue there. I mean, GameStop has also went the whole route of, okay, well, our stores are great. We've had to close down some of them because they're restructuring their whole entire business. And then also they went digital, and something that has helped GameStop in this year is the whole switch of like, okay, you can order online and pick up in store. And a lot of people now are ordering online. They're getting used to it. And that was something that a GameStop user, right, or a person that was a customer of GameStop couldn't get used to yet, because GameStop users are used to actually waiting in line. I mean, if you're a gamer and you know about this, anybody that wants to comment down below, you're more than welcome to, how you felt through this transition and what you remember GameStop being as. Well, GameStop, people would actually do a line midnight or, till the next day almost, trying to get the next new game, waiting for the store to open, go in, that excitement of the game instead of just clicking a button, ordering it, and then going to pick it up, And that was what GameStop users were really into. They were into that interaction, the experience, and that's what's always made GameStop so fun and awesome. And they would do like these competitions and stuff and all that great stuff. And that's been a transition. And this year has helped GameStop actually be able to get their customers, their following, to transition into this whole online platform thing, work around making their website more user friendly and innovate. And now they're partnering up with Microsoft. That's what made this huge jump of $9 all the way to $15. And I can only see GameStop rising. And with everything that happened this year, it brought their revenue up. I mean, their profit margin must be phenomenal, and their revenue and net income should be great. And then also their earnings, I mean, they still haven't gotten back into positive, I'm assuming, due to the fact of the whole restructuring and they're figuring everything out, but they're working their way back up. I mean, just seeing it from quarter one, I know it dropped tremendously, and then quarter two, that's an upward direction. And if we head towards this direction here on quarter three of 2020, that's an upward moving direction. I know we haven't reached positive yet, but it could be a big turning around point here for GameStop. But what I want to see also is what to expect this upcoming week, and especially the beginning of the week. So let's look at what's important for Monday. So this is a very close one. Closed off at 1175, and the 50-day moving average is 1169. That's literally 6 cents away from crossing into bearish territory or staying above in bullish territory. So I'm going to emphasize some things here. I'm not saying that this chart or this company is completely destroyed and it's just going to plummet if this happens, but it is something to pay close attention to, because this run could actually settle down fairly quickly and actually go in the other direction for some time until good news or more innovation kicks in, or investors feel more comfortable staying in the stock. But let's go ahead and see the first thing that's important. So the bulls, this is the highest point reached after this slight dip and recovery before this whole entire fall here. And the bulls need to cross 1445. They need to turn that into a support so they can start to work their way up to newer highs and newer resistance levels. So the bulls need to break through that. It's not like they can just hang out and slightly work their way up. That's good, but for this to hit newer highs and newer resistance levels, they need to break through 1445, turn that into a support, and start to work their way up further away from the 50-day moving average in an upward direction. On the other hand, we have the support level. This is the lowest point reached in the day after this bullish run, leveling off, slight run again, and dipping and leveling off right at 1175. And our support level here is 1161. If that gets crossed, the bears have actually gone into bearish territory, and they broke through the first support level that can start to bring this down to newer lows and newer support levels. So super important. I want to emphasize, pay very close attention to how the stock is reacting and how quickly is it moving further away from support and the 50-day moving average in a downward direction, or are the bulls even trying to reappear and bring this one back up? Those are some key things to keep in mind. I hope with these cues, any investor that is watching is well equipped for the next trading day. And if you feel encouraged or inclined to subscribe, please do so and click on the bell. Don't forget to turn on all notifications to not miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button and let me know you watch this video. And thank you guys so much for watching. Let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and The next one was on September 22nd. And here we are on the 21st after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens. For the most part, not every time, but for the most part. But on the 21st, which was a Monday, it was rising up and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.